Good evening. Once again, welcome to my channel. So today we are basically analyzing Euro US dollar. All right. Someone may be asking, oh, but all this while we've seen you bringing us analysis on synthetic indexes, volatility 75 and volatility 100. Why today we're looking at Euro US dollar? And it's quite simple. It's been quite some time, and then some of my followers have requested that they equally trade on the forex space. So occasionally I should try and bring them updates on volatility 75. Euro US dollar specifically. So today I thought it's wise to come to the chat and then give you a little bit brief update of what is transpiring on the market for euro dollar. So I want you to look at the bigger picture. Okay, look at euro US dollar. Look at the bigger picture. Look at the bigger picture. All right, you should always consider the bigger picture of the market, and then you look at where you are and then where you are heading towards. All right, so let me quickly bring your attention to this. So on the euro USD market, can you see something of this sort from here to here, and then from this point to this point, and then from this point all the way down to this point? This is on the weekly time frame. Okay, and quickly, what did we see? We saw price move into this area, and then we are seeing some sort of price action happening here. So if I just draw this on the bigger time frame, what can you see? You can see that on the weekly time frame we are having a bearish market. All right, that is on a bigger picture. Okay, that's what it is. All right, so let's clear our charts now. So now let's go back and look at what really is happening here on our chart. So on the weekly time frame, we saw that price moved from a certain low to this high. Okay, and this high was at a point where price, yesterday I was showing you something with the breakers. Okay, and then there was something that I needed to add later on about the mitigation blocks. Okay, so we have price moving from this point to this point, and then it shifted down. Okay, price could necessarily, why didn't price get to this point and necessarily trade up into all these areas? We have economic reasons why the market moved to a certain price point and reversal and all that, but then technically and then algorithmically speaking, there are some areas where price is necessarily expected to reverse. Okay, so this particular price action here left enough mitigation here for price to come up to this point, mitigate, and then rally back down. All right, so let's continue. So price traded into this area, and then the mitigation happened, then we are seeing some sort of reversal. So let's go down to so on a bigger picture, I have price being mitigated here, and then we are expecting some downward movement to take down this low. At least, what is the price level here? 0.06445. I'm expecting this low to be swept. All right, but then let's go back to the chart and zoom into the daily time frame and look at what is happening also on the daily time frame. Okay, so on the daily time frame, what are we seeing? So on the weekly time frame, did you see that there was a fair value gap that I drew? So on the weekly time frame, there was this fair value gap just up here, in here. Okay, this fair value gap. So the fair value gap is basically from this price point. Can you see from this price point to this price point? This particular downward movement, there's no trading action within this zone. All right, good. And in as much as it is closer to this strong bullish movement here and then this also bullish candle here, it forms an order block. This is on a weekly time frame, so this particular one I'll consider it to be the order block. Okay, so with this fair value gap resting here, I know that when price trades into this area, hi, sorry, I had to pause the video for a while and then so we can continue now. So basically I was trying to say that you could see this gap, price had to fill in this gap and then we saw the retracement back down. Okay, so on the bigger picture, this is a fair value gap that price had to trade in and fill up. All right, and then we saw the retracement back. We are seeing the retracement back down. Okay, so you could see how price, the body of the candle is respecting just the tip of or the beginning of the fair value gap just here. You could see how the bodies are just respecting it, and then you could see how price had also sat just right on top of this fair value gap. You could see how the body of this candle is also respected this fair value gap. So this is acting as support now. Sorry, this is acting as more like yes, support or an entry point. Not necessarily an entry point, but a support where price had to trade downwards. Okay, so now let's look at it on a smaller time frame as we go ahead. So the daily picture, price has closed and then we formed another day's candle has opened. So look at how today's candle actually traded and all the way went to touch the weekly fair value gap, and then it rallied away from the gap. You could see it was just beautiful here. All right, so there was this gap from here to here, and then price has just filling on the daily. So what is our expectation? You could see that there was a on the daily time frame price traded all the way up here and then broke the structure down. So price came back in to retest or take liquidity from this point, and then we are rallying down. Okay, so this probably this is the order block here, this continuous candles here. I don't know if you can see clearly. So these candles here are the order blocks. So price traded, look at where price traded into. Price traded into this order block, this particular candle. Price traded into it, and then it's reversed. So you could see that this area gave us a clue that this particular candle was an order block. Okay, so when price traded back, it traded back into this candle and then it rallied away. So you could see that as price came back into that area, we're expecting the same reaction around that same area, that is this particular candle being the order block. All right, so we are seeing, so my bias for the market is bearish. So we are looking at the market for tomorrow, today Thursday, So the market opening for Thursday and then a Friday. So we have 2 days more to go, but I'm seeing a bearish movement. But nevertheless, we will expect price to normally retrace before it continues to push down. All right. So let's look at on the 4-hour time frame. So on the 4-hour time frame, this is what we have. All right, this is what we have on the 4-hour time frame. So on the 4-hour time frame, you could beautifully see the presentation here. You know, when price got into the fair value gap, it traded all the way, went up this way, and then when it came down, it broke the structure. You could see that there was a particular structure. Price was trending upwards, and then price had to break the structure. So from this point, when price broke the structure down, price broke the structure from here downwards, price had to trade back and retrace into an area of powerful trading setup. So this had to trade above the fair value gap, the weekly fair value gap, and then traded all the way up into this area. And all that I was looking for to be filled was this fair value gap here, this tiny fair value gap here. You know, this gap, this tiny gap here. And beautifully, look at how the bodies of the candle respected the gap. You know, they were all inside the gap, and so just price had to just wick some pips up here, and then it traded back down below the fair value gap now. Okay, so price has been beautifully delivered in this area. All right. So if you were in the market, whilst you saw the structure shift, all you could do was wait for price to go back up, and then you take your beautiful trade, and then you are out of the market. Okay, even taking this gap as a point of reference, you could have entered your trade here, taking your exit just below this low. So this candle, this price point took down the low here, so you could have taken some pips just from here to all the way to this side. It would have been beautiful. And then so the market's doing all that it's doing. So let's look at the 1-hour time frame. I want to bring it down so that we could see on a daily basis, okay, what has really transpired on the daily basis. So the same thing here. When price broke down, and price broke the structure here, price had to rally back up and then into this area, and then you could see beautifully where price had to come. Price came all the way into this area, and then it broke down. You were normally expecting that price would come back up and trade into this particular block here, but sometimes you give room. Price doesn't always do that. Look at the number of pips that it's just a few pips away. Sometimes the market makers do that to avoid certain the retailers to also trigger their trades. All right. So beautifully, price has been delivered here. Let's look at what happened, what transpired today on the market today. So prior to today was this movement up here. Price broke down, came down all the way to this point, traded back a little bit up, traded in here, and then came all the way up, traded back into this. So can you see that there is a breaker? Sorry. Let me show you something that was beautifully presented here. Price was trading upwards all the way. We had a high here, we had a low, and then the next high would be here. Okay, so price broke the structure here, traded down, broke the structure here, and then price had to retrace all the way back into this area, and then it broke down. Okay, price broke down. So prior to this movement up here, even if you are going to consider the fact that you didn't see this structure shift in here, you didn't see this structure shift here, at least this was more clear that it took down this low, and then it came down again and it took down this low. you could have still waited and taken your beautiful trade in here. You could see that this particular candle respected this. Have you seen this last down candle before? Let me quickly zoom. Look at this particular candle here. The last down candle before price rallied up and then it broke down. So look at that. This particular candle that traded back came almost into the mean threshold of this particular candle, of that bearish candle. Okay, and then what happened? Traded almost into this bearish, the mean threshold of this bearish candle, which was the top of that fair value gap, and then it broke down. So as price traded back up, you could see that it still traded to that mitigation block here. This mitigation, price traded to it, and then price rejected, and then it fell. All right. So prior to today, that was what happened. We had price going into the mitigation block. It broke down, and then we were in this trend, just as you can see clearly here. So today, basically what happened was price had to trade back to almost touch the fair value gap. Whatever is 12. Okay, so you could see that price was trading prior to 10:30. Price was trading downwards. So 12 o'clock noon, price traded up almost into the fair value gap, into the point where it was about entering the fair value gap, and then what did happen? It broke down. So 12:30, this was the New York session. So price, this is a good time. You could have taken your trades somewhere up here and then just taking this right down to take down this low. So let me give you a clue. You see, we saw price trending down, and then there was a high here, and then there was a short-term low which was formed, which went to take down this high. It tells you that price is actually going to break down further. All right. So let's look at so some of the things I say, just take note of them. So let's look at the 15 minutes time frame, and then I will be more clear with. Oh, so I think my internet is a bit slow. So on the 15-minute time frame, this is how the market looks like. So market had to trade all the way almost into this block here, and then what did we see? We saw the market breaking down. So beautifully, what I'm seeing here, okay, is you can see that this particular price has formed a rejection block here, that we are expecting that price shouldn't necessarily. Okay, so look at this. So we are looking at price forming a rejection block all the way this area into this area, because price couldn't really take down this high, traded into it, and then boom, it rejected it. And so price, if should even reverse, can come and take down this high. So whichever place we have, we can set up a trade tomorrow, and we have some small gap here. Whichever place we can take a trade tomorrow, or even if price should point A, B, C, this is a breaker. So if we have price coming to even trade all the way into this breaker tomorrow, price cannot take down this high. So your stop loss can be above this high. Your stop loss can be above this high. But then if you are considering the breaker for your point of entry, then you know that anything above the breaker is a stop loss. All right. So basically that is it on the 15 minutes time frame. Let me look at it on the 5-minute time frame as well. So on the 5-minute time frame too, we almost have the same thing speaking volume here. All right, so price traded all the way into this order block on the 5-minute time frame. So you could see that on the 5-minute time frame, this is a clear order block that price traded into, and then boom, 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 it came all the way down here. All right, so beautifully, price has been beautifully delivered to the downside, and then we are good to go. All right, so guys, that is it that I see on the euro US dollar market. So I wish you all the best in your trading. I'm going to quickly do a breakdown of what is happening on volatility 75 and volatility 100 for you now. All right, so I'll see you in the next video. Have the best of the day. Bye.